Hey, this is Ali from FX Orderflow channel, and in this video I'm going to show you guys how I made a monster trade on gold by using level 2 data. So let me bring 1 hour chart first to show you guys why I entered here. This is hourly chart, and my entry point was almost here. So I made a buy here on gold, and I closed my position somewhere around here. I'm going to explain why. So we have an old cycle here. It's not that old, but it's old enough, like a good wine. So what is a cycle, you might think? Okay, on this day, the daily candle closed bullish, but the delta was negative 2007. So what that means is that some aggressive sellers were trying to push the market down, but they couldn't. And now they are in drawdown. So after something like that happens, there's two possibilities. One, they might hedge above here and like cut their losses. They might accept the loss and close their positions next day or even at the same day. But if they do, the delta will be positive again, because if you're entering a sell position and you want to get out of your position, you have to enter a buy, right? Because when you sell, you have to close your position by buying. So they either hedge on the next day, like this day. This was also bullish delta. As you can see, we had a cycle here also. After the cycle, market reacted and a little bit higher. Or they might keep their losses. So when the market comes back, so if the market is not really bullish, they might keep the sells. And when the market comes back and closes that cycle, they might close their positions by buying on the deep. So usually when the daily time frame is in range, there's a possibility that they keep their positions. Yeah, and right now the daily time frame is in range. Overall, you can't be sure anyway, because you don't know that on the next day or the days after they might even hedge their sales. Basically, they open buy and sell positions in different areas to hedge their losses, mostly sales. So their average, for example, if they keep selling on the next day, their average entry point comes up. Usually it's close to VWAP. And when the market comes to VWAP, they close all the positions on a small loss or maybe even a little bit profit. So yeah, basically you can't be sure. I mean, if you want to enter here, you can't be sure that it's 100% true. But this is, I already talked about value areas and point of control on my channel. If you don't know what are they, check my channel. And yeah, you can see that in a playlist. I'll also put a link in the description. So we also, this is weekly value area, this is value area high, this is value area low, and this is point of control. Okay. So we also had point of control close to these cycles. Usually I don't take these cycles alone. I mean, if there's only a cycle there and there's no other areas there, I don't want to enter that trade. But in this example, we had a cycle and also a point of control. So that's the reason I wanted to enter here. So yeah. But why do I call this a monster trade? You might think that, okay, it's not a big of deal that, yeah, you just made like more than 250 pips of gold. Yeah, why is it a monster trade? Because the stop loss on this trade was only 30 pips. If you're trading gold, you know that 30 pips of a stop loss is really low, especially these days. Maybe back then, before a few years ago, it, it was a lot. But right now, 30 pips on a gold is nothing. So basically, I had the risk reward ratio for this position was 8.5, almost 8.5. I closed it in like 260 pips of profit. Yeah. So let me show you guys after market came to close that cycle, what happened. So as you can see, this area let me go down a little bit. This area, look at this and that. You see, it's the same area, and the cycle is this white line. Okay, so I'm going to show you guys what happens when they close a cycle, and this is how you can confirm that they actually kept their sell orders. How? The moment they touched the cycle, look at the buys. They're buying by blocks of buys. Right after every block, there's another block here. So they're obviously closing a lot of positions here. Okay, so in this type of trades are really risky. After we see these blocks, although they are buy blocks, and you can consider them as absorptions, so it's a risky to just buy right after. But in this case, this is not a fishing trade. Fishing trade is for hunting stop losses. This is just closing the positions. They might move right after the buy blocks. So even though we have buy blocks, it's much less riskier to like the usual time. The usual times when you want to buy in the dip, you have to see the sell blocks and then wait for the buyer to come in the market. But right now we are having the buy blocks in the dip of the market. Usually it's a really bad sign and you shouldn't enter the position. But in this case, it's not actually that bad. So it is still risky, but not that risky. So you could enter here, or you could just wait, and I waited. Down here, we finally have a good absorption on the sell side here. This is still a buy block, but the delta is not like that high. As I said, in this case scenarios, you don't see the buy blocks that much, sell blocks that much. We had a good absorption of sell here, another one here. That was enough for me to enter the market. And after I saw the buyer going above this block with a really huge amount of buys, I placed a buy limit around here. I'm going to show you guys the live footage of my trade in a few seconds. And then the market moved up. As you can see, we moved pretty aggressively with really high amount of buys. So I'm going to show you guys in a second that how I did it on live market. Okay, now as you can see here, I placed my order on the block on the left side. And the reason is that this block has the most sell absorptions. And the market right now is retesting on the block, and I activated my position. As you can see, the delta for the bearish candle is negative. It's on the bottom of the candle. But after retest, it's rejecting, as also the delta is getting positive. It will pop up on the top side of the candle right now, which is a really good sign. It means that this is the retest and it's not going to break it down further toward the stop loss. So now I'm just waiting for the candle, and I'm really careful. I don't want the candle to close bearish with negative delta below my block, because it's a really bad sign if it does. And now, as you can see on the live moment, we made a new absorption. The candle closed inside the block. It didn't close below the block, but it closed bearish with a positive delta, which is a good sign. It means the buyers are trying to push the market higher. And now the next candle, which is bullish here, has a really good delta so far. So at this moment it looks good, but it doesn't mean it's going to be good for the several next candles. But so far, everything is good. So that was exactly my mindset for this position in that moment. And yeah, in that moment, as long as we were keep buying, and the session delta was keep getting higher, I was being more positive about this trade. Although it was risky, but I was really positive about it, because delta is talking to you in this position. It's pretty much obvious that this is going to work. So in futures market, I closed 50% of my position on 1-to-1 risk-reward ratio, closed 5 lots on 1-to-1 risk-reward ratio, and I kept the other 5 lots till the end. and I trailed it and finally got out of the trade in the end of the video. So yeah, now as you can see, although we are rejecting, but the delta is keep rising and we're going to keep buying. So even though we are rejecting and one candle closed bearish, there's not much trouble here, because as long as the delta is getting higher, the chances of us getting higher prices in the next few minutes is much higher than the rejection. So the rejection is not that scary here as long as the delta is getting higher. So right now I was waiting for the market to close above this block, a bullish candle with a really high delta to close above that, so I could make sure that we are in the right path for this trade. And also I was getting closer to my break even. So basically I was watching market really carefully to close above that, because if we reject with a really high sell delta, that's usually a bad sign, and I can like manage my position before it gets to my entry, like move my stop loss tighter, or even move it down to break even, or close some part of my trade at 50%, 40%, 30%. It depends on the situation. So, but right now, as you can see, the delta is getting higher and we're pushing the highs with a really high delta for 1 minute candle. So yeah, so after we had the buy here, there was also a value area low of yesterday. As you can see, the market came to the value area low, and also it was a poke here. The colors are way too much here, so it might be hard. Yeah, as you can see, when the market came in, it got slower, so I traded my stop loss and then got out of the profit. Yeah, and the next day we're still going up. I knew it's gonna happen, but I didn't want to keep my positions. I don't like to keep the positions overnight, especially if the next day is Friday. Usually if I take a trade on Tuesday or Monday, I rarely take trades on Monday. But if I take it on early week, Tuesday or for Wednesday, I might hold it for one more day if I think it's gonna go higher. But if the last day is Friday, no, because mostly on Fridays, the market is not gonna go the way you think. At least for my strategy, is not working like that. And also, as you can see, that we had also a cycle up here, but this cycle is right now was happening because we were closing this cycle. That's why the buy delta was way too high. So you shouldn't enter short here. Also, we don't have any area here. We already crossed value area high for the day, so you shouldn't take that. If we had if the daily value area for this day was up here, yeah, maybe you could take a short, but no, never take the cycles alone. If you're just taking a cycle, just the cycle alone, it's going to be too risky. So I traded my stop loss here and I got out of the trade, and it was really beautiful with a high risk to reward ratio. As I said, I moved my stop loss above and I put it right below the value area. I also had like a 1 minute area here down here, which I put the stop loss there. But later on in the video, I put it right below value area. The value area is the blue line here, and the purple one up there is a point of control. Yeah, I trailed it over there and I eventually got out of the trade. And this is the trade on my CFD account. As you can see, I entered here and I closed it here on 260 pips, and the stop loss was like 30 pips. So this is the part that it got hit to value area, as I said, and I trailed it right here. Market rejected, and then I got out of the trade. Yeah, if the content was useful for you and you want to know more about volume trading and level 2 data, Don't forget to like and subscribe. See you guys on the next video.